Welcome to NN Investment Partners Max 10, a series of one-on-one interviews with our investment experts in under 10 minutes. I'm Stephanie Broad, thank you for joining us. Today's guest is Marcin Adamczyk, Head of Emerging Markets Debt at NNIP. Thank you for being here with us today, Marcin.
Hello, Stephanie. Thank you for inviting me. I'm happy to answer all your questions.
And I have quite a few indeed for you, Marcin, so let's kick off and let our 10 minutes together start now. What makes emerging markets attractive for investors?
First of all, it's large, diverse, and growing asset class, already surpassing $5 trillion US, and it has big countries like China or India in it, but also much smaller countries from Africa or from Caribbean islands that are just at the start of their inclusion into the financial systems. Second, in the world of still very low interest rates, emerging market debt offers the last harbor of yield, with yield between 5 and 7% depending on the sub-asset class. Third, in the world where we expect the growth to come back this year, this will lead to the healing of EM fundamentals, where basically all the countries took more debt, including emerging markets due to the COVID crisis, but the recovery of growth will lead to the healing. And last, there is a growing recognition among the EM investors that incorporating environmental, social, and governance factors into your analysis will positively influence your long-term and short-term risk and rewards in investing in emerging market, but also enables us to create a more sustainable world.
So you say the market is very diverse. How do clients typically allocate to EMD?
Well, there certainly are merits to passive investing approach in some other asset classes. We believe that the case for active investing in emerging market remains very strong. The asset class is very specialized, very diverse. It incorporates more than 80 countries, and all those countries are really evolving, and the instruments available are also evolving. At NN Investment Partners, we believe that the rigorous fundamental research combined with a strong team will allow us to uncover the mispricing opportunities in the EM fixed income. And that can be used to generate consistent excess return over our benchmark, and this should benefit our clients.
Now, could you tell me about NNIP's flagship, the NN Emerging Market Debt Hard Currency Strategy? What benefits does it offer investors?
Through that hard currency strategy, we have been a pioneer in emerging market. We've been doing that for over 27 years, and that provides us with a very long and very strong track record. Also, our proven multi-site approach, where we have the portfolio managers in different time zones, and then we provide the 24-hour coverage of the markets that we cover, but also 24-hour trading capability in order to access the best liquidity moment in every time zone. And also a full range of EM capabilities allows our portfolio manager to look at hard currency, that look at local currency, that look at corporates, to work together. And it enables different variables in their analysis for the better decision making. And last but not least, the integration of the ESG criteria into our investment process.
Now, what is the secret to the constant outperformance of this strategy?
Well, the secret is a combination of three factors. First of all, dedicated multi-site large emerging market debt team that consists of 26 investment professionals with different experience, different backgrounds, also many emerging market backgrounds. Second is our investment process that has been a backbone of our investment style for 27 years now. And it's something that has been proven and tested in the different market circumstances and different market conditions. And third is our adaptive approach to the investment process, where we are able to enhance it in order to respond to the changing conditions in the markets and in the asset class. And the recent integration of environmental, social, and governance factors is just an example of that.
Now, you mentioned the integration of ESG factors in the investment process. Is that special for EMD?
Yes, certainly. First of all, it's very important to include emerging market in global topics such as sustainability, climate change, reducing poverty, or meeting other United Nations Sustainable Development Goals, so-called SDGs. It is also important that our asset owners, they require us to incorporate the ESG lens in our investment process in order to help them out with the financial returns, but also in terms of their sustainability and responsible investment objectives. And to do that well, you cannot just take a developed market framework. You need to design a special framework that is well suited for emerging markets. And to do that, we transited from the model or the framework where we look mostly at the governance, something we have been doing for over a decade, into a model, ESG lens, that looks strategically and stringently at three aspects of ESG, so environmental, social, and governance. And that development score is instrumental in our analysis. Plus, on top of that, we add stability score, which is second part of our lens, and that greatly enhances the predictability and the explanatory power of the model, especially versus less developed, more high-yielding countries.
So what are your expectations for EMD going forwards?
We expect this year to be the year of the return of the growth. So emerging markets will grow, and it will also outperform the developed market in terms of the growth. And then we expect the continuation of the policy support globally, both on the fiscal and monetary side. And that means this will be a conducive environment for emerging markets. And looking at the sub-asset classes in hard currency, we expect the high-yielding part of the universe to recover the lost ground and recover in spread terms. This will also be supported by the positive outlook for the commodity prices. And in terms of the regional dispersion, Asia would be leading the other regions in terms of growth. We expect Asia to grow around 8%. And that means that in Asian debt space, also the high-yielding component has a lot of value to offer for investors. And finally, we expect the growing importance of the ESG issuance in terms of green bonds, sustainable bonds, impact bonds, as the demand from investors will shift into that direction.
Wow, exciting times ahead indeed. And now that we've been talking about this for almost 10 minutes, I see that you're really passionate about it.
I certainly am. First of all, I come from an emerging market country myself. And then over 20 years of my professional career, I spent analyzing and trying to understand emerging markets and also working with people from emerging markets. And that was a very exciting journey. And it doesn't feel like this journey is stopping because we are living in a very exciting times. And that keeps me really passionate about the asset class.
That's great to hear. But for today, it seems our 10 minutes stop now. So thank you, Marcin, for this insightful Q&A.
You're welcome. It's been my pleasure. Thank you.
And thanks also to you for watching. I hope you enjoyed today's discussion as much as I did. See you next time for NNIP Max 10. Don't miss it.